Hey, good day, everybody. Still here, Daily Market Pulse. This for Thursday, August 7th. So stock ends lower, down, lower volume, of course, as well. So correction continues for the time being. We don't actually have an update here on the Dow. Yeah, there it is. Okay, so it dropped into the 200-day moving average. It's holding. This is the area that we're looking to bottom of the channel. Oversold, slight divergence. We're still looking for a bounce based on the put-call ratio that exists, so we're still looking for that move. That could happen with a flush first and then a drop. It might happen in that order. So we're going to see how that goes. The S&P flushed a little bit lower, lower close, lower low. Probably a crack and snap, may tag 1900 and then bounce. Another little divergence there as well. Nasdaq showing at its strength. It's trying to hold at the 50-day moving average around 4350. It may drop to 4300 where the window is and then bounce. Same thing, oversold. Put call ratio is still high. We're still looking for that bounce. TSX now, let's see, 1, 2, 3, it's 5 consecutive closes below the moving average. Now 4 below the 20. At the 50 now, holding relative to a pivot area. Could still flush lower to 15,000. That would be easy. In fact, what did it hit today? It hit the low of 15,056, so close enough. It might still flush to 15. It's oversold. Again, same thing regarding everything else. Looking for the bounce. And then you have the DAX dropping to 9,000. This was expected. That's looking for a bounce here as well. Lower shadow might be identifying some of that early move already. After a strong move into a pivot area, approximately 110, 109.50, we have the US dollar, Canadian dollar pulling back just a hint. It might come back to the 8 or the 200-day moving average here, 108.50. And then looking for continuation of the upside as the moving averages cross over. Hammer formation on the Euro US at a pivot or a support area 133 and a quarter. Let's see if they can hold that. Look at the drops in prices, lower lows, but the stochastic's not. So they're looking for a continuation of this hammer on the upside. Treasuries are bouncing up higher through 139 and going higher still. So the 139 was the target and resistance. Unless there's a falling off the roof, this is looking like it's going to go higher, which again, as said before, maybe 140 round number, but also markets may have a quick flush capitulatory move to the downside. We have the yen popping quite aggressively into the 200, and the other 20 and 50-day moving average are all clustered together. Dropped a little bit today, then came back near a session high. So holding for now, consolidating, looking for a move still toward 99. Gold and silver, after decent moves yesterday, gold in particular had a breakout. It's actually kind of sideways, slightly higher with 1320 was the target. That's essentially where it went today. You don't see it here, but yeah, that's pretty much where it went. I'll take you there. Nope, I want that. And then I'll take you back to this. So there I see 1315 or so. Take you back to the daily. It's not showing. Oh, there it is. Okay, so there's the 1315, almost 1320 is the target area. Silver didn't have quite the breakout that we're seeing on gold. It was much smaller and much lagging, but it's a bullish piercing nonetheless, and slightly higher here on the next candle with all moving averages right there in close vicinity. There's a red candle versus a green candle in gold, but you're still looking for a push higher nonetheless. Let's look at crude. Same thing, crude holding a pivot area that runs all the way across 97, possibly 96. Nice bounce, decent bounce. Still looking for more to the upside, at least temporarily for now, and then ultimately probably higher. Let's go over to small caps IWM. So that was the bounce. The hammer moved higher recently yesterday into the moving average, reversed off that on a gap open. Testing the hammer lower shadow, possible flush again, or at least a test of this area before there's a final move to the upside back toward the window at 113. Next drop below that is 109, 108, 107, but 113 I think is still most likely just because of the put-call ratio as mentioned earlier. VIX is consolidating across 17, almost 1750 with room to 18, 19, and 20, which could happen on a big flush in the market. That would take you above the Bollinger Band. That would put the put-call ratio still above 1 and a very strong probability of a reversal candle then on the markets. So there's your put-call ratio above 1. In fact, it was closer to 115 for that matter and fading just a little bit near 110. But with that, Bollinger Band, the VIX has to come through the Bollinger Band. with the put call ratio where it is, then we'd be looking for a move, like I said, of the moving of the price action in terms of a strong capitulatory reversal bullish candle going from there.